Hello and welcome to the 11FS Spotlight Show. My name is David Brear, and in this weekly show we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry to try and understand what is it that gets them going, growing, and what they really think the future of the industry will look like. On today's show, well, I'm absolutely delighted to be joined by Freddy Kelly, who is the CEO over at Credit Kudos. How are you doing, Freddy?
I'm doing great, thank you. It's good to be back on a podcast. I'm looking forward to it.
We were just saying it's been a while, hasn't it? I mean, we were talking like 3 years ago, weren't we, in terms of the industry and everything that was happening, and a lot has happened since then, hasn't it? Which is quite bizarre. But on today's show, what we're going to be doing is talking about Freddy's career, taking a bit of a deep dive into how the financial services landscape is changing, and actually being really forced to change when it comes to everything that's happening with open banking. So maybe if we start off, Freddy, give us the 1 minute elevator pitch for Credit Kudos if anybody doesn't know about you guys by now.
Sure. So we are a challenger credit reference agency and open banking company. What that means really simply is that we're using open banking data to more effectively measure credit risk for both consumers and businesses. So determining whether people should be accepted and at what interest rates and things like that.
Very good. And I mean, in this environment, that's more important than ever as well, right?
Yeah, no, 100%. I mean, it's one of those things that's kind of often buried under the surface. You know, how this stuff works is quite opaque and has a massive impact throughout life. You know, credit decisions are involved not just for credit. You know, there's all kinds of points, you know, whether it's, you know, getting a new phone or applying for a tenancy application, or, you know, just like really simple stuff. So it's something that's kind of not changed in a long time, and we're trying to do something about that using open banking.
Very cool. I mean, if we roll back a little bit more then about you and about your background, I mean, what sort of led you to this point? What led you to this career doing this with everything that you're looking at for credit? It's, I mean, I can't imagine. I definitely didn't when I was at school go, do you know what? I really want to go build banks for people. Were you like sort of a 7-year-old going, credit history, you know, that's something that I really need to solve. But what sort of got you to this point?
Yeah, no, I mean, everyone always has these kind of like poetic stories that often are sort of created after the fact that make it sound like it was meant to be, sort of thing. I mean, for me, yeah, I definitely wasn't dreaming about credit reference agencies when I was a kid. I'm not that sad. But I started in kind of getting interested in technology. So when I was younger, I was always interested in computers and how things worked. I was building like crappy little websites when I was like 8 or 9. And then, yeah, it kind of evolved from there. I studied computer science at university and was kind of fortunate or lucky, or, you know, other words I probably shouldn't say, to end up working for a number of different startups in Silicon Valley. Which at the time I had no idea. Like sort of startups have become cool more recently, but when I sort of graduated, and this is like 2013, something like that, it was still kind of like you go and work for like big bank or consultancy firm or you know, like Amazon, and that was kind of your options. And I just got lucky in finding a role in a really small startup and got a visa and went to the States. And then sort of through experience of building companies, I actually worked for 2 different businesses, and the second one was a Fintech that was doing transaction analytics, which is definitely part of the formative story of Credit Kudos. Got into that, and then just wanted to build something of my own, really. I always thought, you know, that would be cool. And having sort of been through some of these pains and challenges of not being able to get access to credit and kind of lifting the hood on that and going, well, actually, that doesn't really make any sense how that works. It was just a big motivator. And to be honest, at the time, I was so naive. If I'd known, you know, what was laying ahead of me, I probably wouldn't have done it right, because there's just a lot of complexity there that's kind of hidden from view.
So many people think that, don't they? Not only in terms of the industry that you pick and the thing you set out your business to do, but just running a business more broadly. I mean, being the CEO of a company. I mean, how do you find that? Because there's a lot of different sort of strains and stresses on your time. How do you sort of manage those?
Yeah, it's really difficult, and I think anyone that says otherwise is just I was going to swear then, it's just lying. And there is this kind of, I think it's moved away now, but like early on, I remember sort of in the startup ecosystem, you go to these events and everyone was always like crushing it and killing it and like, doing this and just did this funding round and, everything's amazing. And I was always like, God, I must be doing something terribly wrong. Everyone's crushing it. I'm not crushing it. And sort of over time, you kind of realize that the journey is really challenging, and you don't generally, you only hear about these overnight successes, 6 or 7 years in, once they've got to that point and figured out and got all the scars and all that sort of stuff. I kind of think about running a company as just sort of like, building a team of people that are really interested in a certain problem and, trying to facilitate them to go after that problem and trying to get out of the way as much as possible. And I generally that seems to work. But it changes at every stage. Once you get to 10 people, it's a different set of problems. Once you get to 50, it's a different set of problems, and you kind of have to reinvent yourself, I think.
Yeah, I mean that is the thing, isn't it? And I do really subscribe to your what you're saying. It's actually the vision of being an entrepreneur, the Elon Musks, the Richard Bransons, the globe-trotting kind of nature of it. The reality is it's just hard work, right? And actually, the problems that you're dealing with, there's something really interesting. I think being the CEO of a business is sort of, particularly if you've founded that organization, I think it's like one of the loneliest things in the world, because you're really creating a narrative and a momentum for other people, because exactly to your point, you want people to be able to do the best things that they've ever done in order to pursue the objective that you have as an organization. We talk about this a lot at 11FS. Our mission is all about just unleashing talent. Because actually, it doesn't really matter what we're doing. If you can bring in the most talented people on the planet and unleash their potential, then you can achieve really amazing things, can't you? But I laugh at your point around breaking things. I mean, team meetings, like processes, structure, performance, like all of these things you break as you scale, don't you? But there's something quite nice about that as well. It stops the job being boring, doesn't it?
Yeah, no, definitely. And it's even more interesting in financial services in like regulated markets, right? Because, if you are, outside of that world, Facebook always had this like move fast and break things thing, which I think has been a bit overused now, but, it's kind of true. Like, often the biggest risk for a company is like not doing something wrong. It's kind of not doing anything at all. And so you're better off like trying something. But then when you layer on like, the regulator and like customers' data and doing, all of these things that you need to do to kind of stay compliant, then it like finding a balance between those two things is quite difficult, because you sort of, you have to operate like a kind of FTSE 100 company when you're only 10 people and sort of jump through the same hoops that they do, but with far less resource. And that's kind of a fun of fintech that maybe other markets don't have.
Yeah. I mean, you don't have the gift or the curse of 10,000 people managing risk, do you? But, and I say gift and curse because there's pros and cons for either way, isn't there? But that's amazing. I mean, maybe taking a step back then in terms of the industry, obviously, we've talked over the years a few times about, the impact open banking's happening, the changes that we're sort of seeing in, the technological space within financial services. And as you touched on, the sort of regulatory climate is changing really dramatically, globally, epicenter being London, but globally we're really sort of seeing the change come about. I mean, how do you see the world shifting?
Yeah, I mean, it's challenging. I think a lot of people that work in our business are really just motivated by scale of, if you can build something, we have this like amazing era where like the cost of building a company or building a product that like billions of people can reach has come down so low because of, cloud computing, virtualization, all this stuff, access to, there's still a lot of people excluded, but a lot of people have smartphones and that combination with, finance being this kind of like fundamental, building block of society and the sort of combined scale plus impact fintech is, I think, like so exciting. And that's kind of how I sort of happened upon, I think, the problem space and the area. And obviously, it's very hyped as a result, but that's I think what we're all here for. And as far as where the industry's going, that's a difficult one. I definitely subscribe to this. You mentioned Elon Musk, this kind of, he has this sort of principle of, money just being data, right? And it, moving data around, and we kind of still treat it as its own thing. And it's sort of like, we have to go to this separate place where we talk about money, both socially and technologically, and it doesn't really make sense. And so the kind of trend of finance just being embedded into, daily life is still like pretty early, right? We're still just getting hyped about like the fact that you can borrow money at checkout and not do that separately and things like that. It's really cool, but it's still like one step on a journey of kind of overall meshing those two things together, I think.
Yeah. I mean, it's interesting, isn't it? Being in London and sort of seeing, fintech really sort of rise over the last couple of years here. I mean, it is amazing. You sort of talk to people within the community about, where the industry can go and all the opportunities. But as you say, the big high street organizations, the big incumbent banks are still sort of operating in quite a similar way when it comes to, business models, the approaches to market, the approaches to customers. But it feels like there's, people sort of say, I mean, is there enough still in fintech to keep the investment coming in? But it feels like there's so many more slices, like say credit being a big part of that, actually there's so many different slices of financial services that still needs fixing, isn't there?
Yeah, totally. I mean, I there's just so much stuff, to work on. And that's like, that's the entrepreneurial role, right? Finding these things we didn't know we needed that suddenly everyone needs. And even just credit, like within credit, this idea that you just sort of like apply for a loan and then pay it back. Like why does that necessarily need to be the way that it works? Everyone's salary is being paid, like essentially, our employers are in debt to us in lieu of 30-day installments that we get our money, and like, it doesn't really flex around us in the way that is possible, right? And the way you can connect data sources together to achieve that is super exciting, but still kind of undertapped at the moment.
Mm. So where did the idea for Credit Kudos come from then? What's the sort of nexus of, was it a bad experience with a provider, or how did you sort of come up with the idea?
Yeah, so I had this time in the States. I was there for about 2 years, coming back, moving to London actually for the first time, to the big smoke, and trying to find somewhere to live, and basically like didn't have a credit history. I hadn't really thought about it before, as many people don't. And so because of that, I remember quite distinctly, like my landlord or prospective landlord was asking, are you going to be able to pay? Like, I don't know who you are. Are you going to pay this on time? Are you even like a real person, kind of thing? And what I ended up doing to answer that question was having my bank in the US, which was Wells Fargo, like they had to kind of like fax my bank statement to whoever, I won't name them, but whoever it was in the UK that I was going to be renting from, which is it's BS, right? Because I could have just downloaded a bank statement off the internet anyway, but B, it was just a terrible experience. And C, I was kind of like, actually credit bureaus, weirdly in the UK, like we have the same three that we do in the US, but they're totally there wasn't like, oh, I'll just like import my history from America because I've moved over. And then you lift the hood on that, and it's like, it's this kind of, 100-year-old sort of, I'm trying to think of words that are complimentary, but it's just like a database, right? It's a database that no one ever signed up for, that has all our information. It's probably not accurate because they don't really control it that well. We have no idea that it's going on, and they sell it without us knowing about it. Like, I mean, how broken can you get? Like, it just doesn't make any sense. And so that was kind of, the motivation. And I worked at this business called TXM, which was eventually sold into another company called Yodlee, which is one of like the early kind of bank transaction aggregators alongside Plaid in the US. And what we were doing there was basically building predictive models for retailers, so people like Macy's and Target and those kind of guys, to interpret transaction data to predict market trends. And so from the back of that, I've kind of seen the power of what you could do with transaction data. And obviously, well, maybe not obviously at the time, we kind of had this very early sort of seedling of like open banking becoming a thing. We actually started the business before that was definitely going to happen, which was in hindsight probably high risk. But
it worked out fine. Don't worry about it.
Yeah, it was all part of the plan. And here we are. So yeah, that's kind of story. And you know, I can talk about more about what we do, but open banking is kind of the unlocker to sort of trying to build more accurate ways to measure risk.
Yeah, I mean, if you can, that would be great. I mean, how does the product work? Like, how does it differentiate from the market? And really, where are you trying to get to? Because I know there's this is not something, like you say, the complexities of the existing systems and the importance actually of it in terms of not only, you know, gaining access to credit, but the impact that has on a whole range of other auxiliary products that sort of sit within financial services. You know, that's a long road to fix all of those problems, isn't it? But tell us a little bit more about the product to get us going.
Yeah, so in simple terms, we so like everyone goes on about machine learning in fintech and other markets for that matter, and ultimately like it's sort of pattern recognition in a way, right? And what you need to kind of build good predictive models is good data, and typically that's some observed outcome with some inputs, right? And so for us, what we're doing is we're taking open banking data as that input, but then we're also, because we're regulated as a credit reference agency, we're also able to view loan performance data, credit performance data that comes back after the fact. So we know for some anonymous individual, this was their transaction history at the point they applied for this credit product, and then this is how they went on to perform. Did they pay it back? So on and so forth. And what we do to kind of build predictions is we take thousands, millions of those observations, and we train models that basically say, what is it about the before that predicts the after? And then when someone connects through open banking with Credit Kudos through one of our lenders, that data in real time is analyzed and essentially compared to that universe of past customers. And that's how we predict a risk indicator, which means we're essentially scoring financial behavior as the predictor of credit risk, rather than this kind of like slightly opaque, weird previous system that we had before. And it also, I mean, it goes beyond just the point of application, right? So it's kind of weird that even for you know, some of the most kind of long-term credit products at the moment, your credit score is basically calculated at the point you apply and then forgotten about, and you kind of, you know, that's it. And so one of the things that you can do with open banking is actually have a continuous relationship with the customer throughout the life cycle of credit. So we work with lenders to figure out, you know, rather than I just pay the same amount each month, should I pay a different amount each month based on my circumstances? Should I change the date of that payment based on when I earn? Should I be able to transact automatically using the open banking payment rails? So we kind of think about our business more as like, what is the tool set for modern lending, or like this new type of lending, and how do we kind of tick off the jobs to be done for those companies? And credit risk is a big part of that, but there are other facets too.
Yeah, I mean, as you say, that's crazy, isn't it? On a customer's perspective, the idea that, let's say we take out a 10-year loan, the fact that I'm being, you know, point in time data is informing, you know, the duration of those 10 years is just crazy, isn't it? You know, so, and actually the performance of you as an individual changes over time, doesn't it? In terms of your credit worthiness, as it were. But even as you say, those terms, you know, it's very alien to the customer, isn't it? You know, am I worthy of credit? Am I worthy of these things? And actually that narrative shifting, you know, it really feels like you're sort of putting the power a little bit more back into the customer's hands, which is fundamentally what financial services is there for, isn't it? You know, it's a tool to help people achieve things, and that's that. But I mean, the response has been really great as well. I mean, how have you found over the last few years the adoption?
Yeah, I mean, we've done really well. We've been really lucky in kind of being in the right place at the right time, which is, no one ever admits that, right? And so, you know, and to be fair, we were probably not in the right place at the right time at the beginning. So maybe it's just waiting long enough, which is often the case with startups. But, yeah, I mean, this whole trend, has really been unlocked by, new businesses that kind of really rapidly growing and building these models. Like we have a kind of good chunk of sort of what you might call like traditional financial services players using our solutions, but kind of the growth in kind of really going all in on open banking is coming from like fintechs basically. And I think a few years ago, and it's weird to say this, but like selling to fintechs wasn't like a credible model. You know, a lot of these investors were like, oh, you know, I don't know if these companies are still going to be here in a few years, sort of thing. And so, you know, it kind of takes that. And if you look at, you know, the like historically, when you have like great economic impact, like, you know, the 2008 crisis, like generally it's new entrants that kind of have accelerated from that by kind of taking a different approach and sort of building different product types. And we've really, you know, grown through neobanks and things like buy now, pay later, you know, new types of credit cards, credit brokering, like price comparison sites, things like that. You know, those guys are kind of the new front end for a lot of borrowing. And we particularly focus on kind of the unsecured side of things, which is where the problem of credit decisioning has sort of the greatest scale and greatest impact.
Yeah. I guess to that point as well, I mean, with things like buy now, pay later, or, you know, more sort of, smaller transactions but actually, you know, more frequent usage of them, having systems that are a little bit more fleet of foot and, you know, digital rather than sort of digitized. That feels like another good reason why actually that, you know, investors always say it's like, why you, why now? Well, for you guys, like the rise of open banking and everything that comes with that, but also the evolution of financial services to mean people are going to be using these things much more frequently than they were before. Like having that reliability of systems today seems more important than ever before, doesn't it?
Yeah, 100%. I mean, and that's kind of a result of consumer trends, right? You know, there's so many more people that don't earn income on a kind of repeatable salaried schedule. You know, they are part of the gig economy. They're a small business. They just haven't borrowed money before and haven't got, you know, a credit profile in any way. And, you know, credit profiles only exist if you have some interaction with the credit system. And so, you know, you're basically invisible until you do something and you get this classic chicken and egg problem. So there's just so many things that are sort of driving that. And you know, these awesome companies are building products that cater to those individuals, and they're growing as a result. And therefore, you know, you get in at the ground floor and you kind of build out your proposition based on their needs. And it's just a perfect working relationship, really.
Yeah. I mean, you touched on this slightly, but, you know, the point that you made around, well, big incumbent organizations now are sort of getting on the bandwagon. You know, we're sort of seeing many organizations now really modernize their technology stack kind of across the board. Are you finding more and more interest in your services from a broader and broader demographic of organization? Because, I mean, we're seeing personally from 11FS's perspective, like just the amount of non-banks wanting to get into banking is amazing, you know, actually in terms of distribution of financial services and everything that goes on with that. Are you seeing much more of a broad market now for the types of things that you do?
Yeah, I think so. I mean, the tech stack thing is definitely helpful. I think, you know, one of the notes on this was like, what's the competition? I always joke like the biggest competition for B2B fintech is doing nothing, which is still like a very viable option for a lot of people. Yeah. And it's not like, you know, we're fighting each other. It's kind of like you're fighting inertia.
Yeah. Apathy. It's always the killer, isn't it? It really is.
Yeah. And I think that's still true. And to be honest, like the blocker hasn't necessarily been, well, there's a number of things, but it's not just, you know, the core banking software being old. It's kind of the value driver. You know, we're really big on this. You know, I read someone once read, like my team probably wish they hadn't sent it to me, but the Challenger sale, which is like all about, you know, like this classic thing, like so many fintech companies go in and be like, oh, this is like who our investors are, and we've been around for 5 years, and look at all these awards we've won, and this is our pretty website and all that stuff. And no one really cares about that. What they really care about is, how does this link to like my business objective, and the linking of credit decisioning into that has become easier, certainly. And a lot of these big lenders are kind of saying, well, look, particularly in like cards, we had a nice business there with credit cards, and someone's kind of eating our lunch a little bit right now. A couple of people are, and so what do we do about that? Yeah. And what do we do about loyalty? Because no one's really that bothered about brand so much anymore, and so that comes into like this kind of life cycle of credit. How do we engage people throughout the process? How do we offer them something that they can't get elsewhere? And again, open banking sort of feeds into that. So definitely it's changing, and we do have a bunch of businesses that are probably what you'd call more traditional financial services, but they're launching products rather than trying to sort of retrofit. They're launching new products that kind of from the ground up are using different technology.
Yeah, it's interesting the point you were making there. I mean, the challenger sale, I'm a big believer in, and particularly actually when you're if you're entering into a slow moving incumbent market, how do you create differentiation for yourselves? I mean, it's a big part of. At 11FS, we talk so little about what we do, but we talk so much about what we believe. And that's not by accident. That's absolutely on purpose, because essentially if you can get people into the same mindset as you, then fundamentally you're in a completely different point from a relationship perspective. So it is interesting, isn't it? When you've got those, all the money, all the customers, all the brands, but actually what they don't have is product that really solves the customer's problems. So, this is where you guys kind of step in. So, I'm afraid we're going to be running out of time really, really soon. So there's a few questions that I always kind of like to ask before we sort of jump out, which is what company would you, or what company do you admire in fintech? I think it's always interesting because we also all sit here sort of looking internally with all the things that we have to do. But is there any companies out there that you look at and you're like, man, those guys are killing it?
Oh, wow. There's a bunch. I mean, I think the kind of unsexy problems are most interesting to me. So like your Onfidos, Comply Advantages, these kind of guys where, they have just built a really strong machine that's solving a massive problem. And, the scalability of that is kind of infinite. So, definitely, the kind of like B2B players, I think like, identity as a theme of those things is super interesting to me. So I've got companies like Alloy in the US as well. I'm super interested in. Obviously, just did a big round, just because that's like the building blocks of everything else, right? And so if you can nail that, then you're in a pretty good spot.
Yeah, and then as you say, you become the building block for the next generation, don't you? In terms of Onfido has definitely become that here, hasn't it? In terms of where they've gone. Hussein was definitely onto something, wasn't he? The other question is what advice would you give your younger self? I mean, you've come a massive amount of progress in a really short period of time in terms of everything that you've achieved with Credit Kudos. So what would be that advice you'd give your younger self?
Assuming mining Bitcoin isn't on the table.
That would be good. If you had the capital at the time, sure. But
well, you wouldn't need any, right? It was a long time ago. This is my younger self. I think like experimentation, like, I said it before, no one ever admits that it's an experiment and it's really unhealthy. Like, you gotta be willing to fail. And I think that's something I learned from being in the US as well. It's like, and I say it to my team, we all just have to embrace the unknown and do some stuff that's experimental and may or may not pay off. And it's okay if it doesn't. And like, if you kind of take that mentality, I think you have an easier life when it comes to startups.
Yeah. It's interesting, isn't it? How many organizations you sort of talk to where they forget that it's just people. Like, actually, it's just people in every organization. And actually, exactly to your point earlier on, if you can, get them to a point where they're really, buy into what they're doing, but that actually the vision of what you're trying to do, the purpose behind it is, gets them out of bed every day, then I completely agree with you in terms of that setup. So what's next for Credit Kudos? What's on the horizon?
So much. I mean, we're scaling like nobody's business. So
So there's a jobs URL coming, right? Yeah.
Oh no, I mean, yeah, like I don't actually know what it is. creditkudos.com/careers maybe. But no, I mean, in terms of like, as I said before, we're all motivated by the number of people using the product. We literally have like a ticker, like a mechanical ticker on the wall of the office that counts. And that's just kind of like going nuts. And we're building a bunch of things. I talked about this kind of like, what are the jobs to be done for lending? And we're moving on to a few more jobs to be done around, payments, and kind of in-life management. We built a tool recently around building credit risk policy. We're just about to launch a bunch of new machine learning scoring models, which are really cool. So yeah, there's so much. We feel like with open banking, we've sort of got to this point where we've got like the platform, we've done the basics really well, and now we're kind of like doing all the fun stuff that's enabling like value creation for our customers. So it's an exciting time.
Fantastic. Well, congratulations. It's really awesome to see you guys keep going from success to success. And like I say, sometimes you've got to dig out a lot of the trenches to get to all the really sexy stuff that you want to move forward. But it's great to see that happening. I'm afraid we are going to have to wrap it up at the end of the show now. But Freddie, where can people learn a little bit more about you guys and all the good work that you're doing?
Creditkudos.com. I'm Fred Kelly on Twitter and LinkedIn and all that good stuff.
Very good. As for us, you can just follow us at 11FS on pretty much every social media point at this stage. I think we're pretty much everywhere. I think we're becoming almost ubiquitous with the internet, which is kind of bizarre. But or if you want to catch up on any of the other episodes of this show, if you just search for 11FS over on YouTube, you'll find every other episode of the show that we've done. All right, guys, that's all the time we have today. But thank you very much for joining us. We'll speak to you soon. Goodbye.